Hey guys, how are you? Crypto Sniper here. Yep, having a look at a number of the legacy YouTubes. I mean, this particular one, there were many others where I mentioned we would get into the 6,800s as part of the down leg. And many people didn't like that one. This was one where I actually referenced hitting into the 6,800. So that means trading below 6,9 in the title. Why down to the 6.8s for Bitcoin. If I have a little look at that, what was it then? It was already just under 10,000. It was 9.8 going 10,000. So we called $3,000 down to happen. And we also gave a time frame for that. We said it would happen before the end of the year. In fact, we said it would happen before the end of November. That has now occurred. It's the 22nd of November. You have traded through the 6,900s, and it wasn't an easy ride. The progress was good initially, and then of course that spike that threw everyone up. China was gone from banning Bitcoin to unbanning or banning people who banned Bitcoin. So it's been an interesting and bumpy old ride. But certainly the method that gave us the sub 6.9s into the 6.8s has shown its worth. In fact, I had one particular individual that described me as irrelevant pessimist who should be unfollowed. And I'm afraid to say his leveraged longs will look worse than our trading accounts at this point right now. If he's still there. So what we've got for you, you can see these key levels just run for us. It's a busy chart. You have now met the bottom end of the channel, and we also called for those 6.8s levels to be run. That meant the 7,000 level had to fall. When you were watching me doing my Georgian hat, sunglasses, and double bicep there, let's see that again. That's worth seeing again. How can you doubt a man who puts a hat on like that and sunglasses like that and pulls the double bicep? I don't know if it's still there. Who knows? Crazy scenes indeed. But I was illustrating the concept that people are expecting all-time highs bears, all-time highs bears. One I've done a few times, and I won't go into again if you've been watching this channel. But the 6.8 is done, and the spooky bit, the really spooky bit for us, we enjoyed the break. We did well on that. We actually got something out of the continuation. So I was out, I went riding motorcycles during this dull period. We actually got a spill, luckily due to sizing, I was a whole bunch smaller, and then ate some red right up to here. I got out once we started congesting. Thankfully still very strongly up because we were supersized on that part. And then I stayed out of the market actually. I said, well, that's quite a spike, and I bottled going any further. By the way, that never ran our stop of our traditional HVF. You can learn more about HVF method by checking in for a call. So do exactly that. You can learn more about how we're doing it. We've kept our guys out of investment Bitcoin in fiat so that they can buy down lower. And I would argue that that has been the right decision since this setup that is moving around. Let's get back into draw mode again. Get back into draw mode. Since the setup that we said would be a bear as well. Many calling bottoms and expecting push. So we didn't do too bad. But at the same time, I would love to have told you that from the get-go, okay, I was away and I don't leave long and big oversized positions on while I'm away, so I did close. But I would have been far happier and would have been a better exponent. So the notion of trying to be right and clever, it's not important. It's whether you make money. Thankfully, we made more money there than we ate red on the spike, but I stayed out. But for fractals here, a few of the guys might have taken it in the community that we'd identified, not me. But in actual fact, the best thing would have been adherence to process and our stop levels, and having gone all the way and not been supersized, and just stuck it all the way through to there. And you will have met your target on the trading down to the 6.8K. It is very destabilizing when you get a high volume super spike like that, because you're not sure if it turns into a channel and then pumps again, or whether it'll fizzle. Now, I want to just warn folk that fizzling of spikes is highly common in crypto. So even after this happened, I said to a few of the guys that were wearing a bit of red, wait, you'll be able to trade your way out of this. And we waited and we got out quite a bit lower. But we said it could still complete target, as strange as it seemed, because it never validated. But there's a lot to be seen, and all we got was slowly grinding down, fractals setting up, grinding down, and then this big capitulation. Not only has it made target, but it's done so within our time frame analysis where we would have applied a time stop. So we would have called time around about 2nd of December, last day of November, depending which exchange you're on. And in actual fact, it's done the target level with a week to spare, in spite of doing 75-80% of your target, running all the way back literally to within a handful of dollars of your stop, and then spilling down. So, you know, it's a great process. It's an absolutely great process, but a process is only as good, in full honesty, as your ability to adhere to process. And the market makes you earn your profits by testing you psychologically. And if you're not going to sit and stand on your stop, and this is what we teach, you stand on your stop, note in one single lesson the complete invalidation of trailed stops. You would have been taken out any of these levels, and you certainly would have been taken out on the spike against process. So target comes first, original stops, write the check for that amount and stand on it. Don't trail it, because markets are volatile and ranges suddenly expand, and you will be run out if your stop is there. You'll be closed with a loss. So stop placement does more damage to most traders because they don't know how to use it. Note, that doesn't mean Francis just said don't use stops. Big credibility gap step in that discussion. We use stops when there are true squeezes, and that the price behavior shouldn't revisit those levels again. I would say the proof of the stop is that that spike actually stopped short of our stops and then went back down and fizzled. This is an endorsement of the method. So despite a major fundamental message that ran the market counter to trend and this long period of contraction, and the subsequent break, that it still made target in time, and the stop was still not run despite China's big echoing and mutterings that was exceedingly bullish, or deemed to be at the time, assuming that's the reason. The truth be known, we don't know. But adherence to process is tougher than you think. It's sometimes better that you don't watch the screens, you switch off, you leave those stops in, you've written a check in your mind for that trade, you write it, you put it on the spike, it's gone, I don't touch. The only way I'm out is if it comes and gets that stop. You don't say, oh, it's a matter of time, I'll just save some of the money. No, that's part of the psychological game that wins you your profits and wins you your RRR. And that whilst I made overall money on this, I don't get 8 out of 10 or 10 out of 10 for adherence to process, for a variety of reasons, some of which are like holidays, which are justifiable. But generally, it wasn't adherent to process. And it shows you how testing the journey can be. I teach in the crypto rooms that it's like a mechanical bull. The whole goal of the market is to try get to throw you off your process, to do so much funky moves and jigging and jangling that it throws you off the mechanical bull. Your whole game is psychological, and it's between your two ears, and the best way to survive is often not to watch every tick. The minute you start becoming tick fascinated, you start watching through the microscope, and you lose the wood for the trees. Overall, we've got a trend channel that is going down. This is now the revisit. I've illustrated it to you. By the way, as a first setup in a new trend, we often warn you can get a little bit more. We could dribble down to the full bottom part of the range of that channel. Let's have a look how I've drawn the channel again. I'll just uncap the eyes again. Yeah, we're there or thereabouts already, so we've probably done the channel visit. It could stop at that level, but it could have a weak rally. So what does it do next? Well, who knows? The truth is, I don't know. We could revisit the other part, but you could get a rising wedge that brings you roughly to the midpoint of the channel. So I've drawn the channel for you. There's also a midpoint We do axes for everything, and you could visit the midpoint and you could come back down, start marginally lower lows, and then start basing out, lose some of that volatility. You've picked up a lot of volatility in that down leg in the same way there. You need some of that to dissipate. That's the beginning of making lows. And then maybe you'll visit the other end again and rest, pause, and then we'll start to have some pattern structure that could break us up out of the channel. And that could come as well. But you could first have a little bit more overperformance to the downside. It's not to say it's over. The key element we warned is that when you had the spike, there was not enough that had happened. There was not enough that had happened to justify calling the bottom. This was our comment regarding the proportionality and the distance and the time. So we did it by price, we did it by time frame. This did not constitute a full correction to there. And everyone wanted that to be the final low because they all want moon. We all want moon because the only thing we understand is when we can be dumb and stupid and sit in trade, hodl, and the thing just quadruples in short time frames. I'm sorry, those kind of market conditions don't come all day long. I know you want your endorphin rush, your dopamine rush. Go see our newsletter with the monkeys and their dopamine requirements and the unexpected rewards of turning your computer on and something absolutely outrageous has happened to the upside and you've just made a ton of cash. Who doesn't want that? Who doesn't get a head rush out of it? Unfortunately, in terms of markets and market price behavior, it's not the typical environment. In fact, it happens very rarely. And if all you're going to do is pray for moon, then at the end of the day, you're going to be disappointed. Sometimes you've got to learn something and understand price behavior. And if you want an environment where that happens, you could start with our community. So we said 6-8 and it's happened, but we didn't say price behavior journey is going to be easy. It's going to be testing. It's the mechanical bull. He wants to throw you off. But if you're still on after the 10 seconds are up, you win the prize. And that's the nature of the game. Anyway, so quite volume expansive. It needs to dissipate. I would expect the possibility of a little bit more. Then we come back and we watch the structure. One thing I don't do is read charts for patterns when you're in such a volatile point. We've just made a major target, which we call, and typically, as you'll learn in our 5 stages of a breakout, you get some pushback at some point. You may get some overperformance, but then you'll get some respite. Again, the bull callers will come back in again. Don't be the first in the new trend. You're going to have major opportunities to be long in the super long bull period where you will sit, and I expect you may get a shot even at your dopamine enriched 2017 second half of the year to December, really powerful market. You may get that again coming, but you've got to keep your ammo dry, as I keep reasserting. Anyway, so target made is the key situation. The 6-8 has been made, the structure has been performed to, the process has been accurate. The journey was the mechanical bull from hell, because he took you literally to the limit, virtually turned vertical and stood on his horns to try throw you off, succeeded in throwing most of us off, but nonetheless we took some money out of it and we'll take some respite. It was a ride, a real big ride, and most of it came in the test there. But that's all good and that's all part of the learning. So stand back, join the community, get the free webinar series out of the links below. It's entirely free. Follow us and like, and wait and see what we come up with out of the footprints in the sand that the price behavior will leave us, because that is the truth, what people are doing, not what they're saying. And let's see if we're going to overperform to the downside and look a little deeper, whether we're going to adhere to the channel and maybe grind upwards in some form of downside continuation like a rising wedge, or whether it'll be more reversal orientated, which it could be, such as inverted head and shoulder, hammering out rounded bottom lows. That could be a reversal. My suspicion is we're not quite done yet. I think you're more likely to get either flags or rising wedges for another dip. What tends to happen here now is that everyone is a momentum chaser. It's called recency. It's called recency syndrome. People all are whatever the current most vicious move is. So now you're going to hear the Uber bears coming out and saying, I'm telling you it's 1,000. Someone else will go, no, we're going to go to $500. We're going to be in 3 digits soon. And, you know, all those kind of people will come out. I don't think they're accurate either. I don't think we'll go below 3.2. I think we're getting close to that point. somewhere between the 4.5s all the way up to where we are now is going to be that low in there. So don't listen to the Uber bears now that we've had a spill any more than you should listen to the Uber bulls when we had the spike. Let's just watch the footprints it leaves behind for us. Anyway, we'll update you further, but you can join us if you feel that you like our method by booking a call in the links below, but it's not for everyone. And yeah, let's see what the next macro big target that gets generated that we can put out there. We'll be offering that up to our premium community first, some of which we might leak out to you guys. But thanks for watching. Please share and like, and we'll keep you informed to the best of our ability with reasonable respect to our premium guys. All the best for now. Bye.